Today what I'm going to talk to you about is the idea of a cashback credit card or a cashback credit facility, and whether that is something that actually is a life hack or whether it is something that is not. And I'll start by introducing some criteria to talk about life hacks, and then moving on and comparing them against the cashback credit card. But before we do that, do I have a clicker here? There we go. Well, let's power that. Thank you. There we are. So the bullet points of my bio have already been covered, but I don't think most of you know me, so I'll go over them again because I'm kind of proud of most of them. So the first one is that I'm a small business advisor at Scotiabank. I work at the main branch and I get to meet a lot of new entrepreneurs. The second big thing that I do these days is I'm an MBA candidate at the Edwards School of Business. That's the Masters of Business Administration, and so far it's been an amazing degree for me. I'm also, as Alan mentioned, a semi-professional banjo player. I do play in the Scudd Family Band. Maybe you've heard of us. And I also am a part owner of a rickety old van. So obviously that's my favorite accomplishment so far in my career. Now, back to what is important today. We're talking about life hacks. And the question that I think we need to answer before we get into the details is what really is a life hack? So we all sort of know that there's a very clear, intuitive sense of what a life hack is, but let's put that into words, because words are great. So let's start with a practical definition. When I'm looking at it from my life, what am I looking for? What am I looking at when I'm describing something as a life hack? Well, I use the definition that it's a tip, a trick, a skill, or a shortcut that the hacker, that's you or me, uses to generate a benefit. So that's either money, time, or convenience. So the easiest example is something like I have up here with you turn your toaster sideways and you get free grilled cheese. Easy grilled cheese, cheap grilled cheese. And that's something that relates mostly to me and what I have internally. Now, if we want to really examine a cashback credit card, we need to go a step further on that, and we need to start looking at economics. Now, I don't study economics, but I do study freakonomics. And anyone that has sort of a cursory understanding of that will know that we're talking about incentives. So let's talk about the economic definition of a life hack. Well, what is it? My sense of it is that it is any situation where there's an advantage taken by the hacker of an external benefit for their internal benefit, of an external process, excuse me. And we're talking about incentives in the sense that there are ways to encourage us to do what we want to do, and for businesses to encourage us as well. And the reason I have some bread up there is because the best economic example I can think of is the idea of a bakery, where at the end of the day, at midnight, at 2 in the morning, they sell off all the stock that they couldn't sell because now it's stale. So they have an incentive to dispose of their non-saleable product quickly and cheaply. You have an incentive to get free bread, mostly so you can make grilled cheese with your toaster life hack. And that's a situation where your internal incentive to get free bread is lined up with the business incentive to get rid of their bread. That's one definition to look at a life hack. But now we've introduced another player into the game, another actor. And certainly that can be another person, but it can also be a business. So let's take a look at what a life hack is in terms of businesses. So what I like to say is that a life hack for a business is an innovative model or process that creates a benefit where before none existed. Now that's either a benefit for you as the consumer, as the individual, or for the business. So businesses can operate life hacks and you can look for them yourself as well. And the reason I have that little piggy bank up there is that coupons are a great example of a potential life hack. If you know how to use coupons, that's a tip, that's a trick, that's a skill or a shortcut that you can use to align your internal incentives with business incentives. So there's a great example. That's something to think about. But there's a caveat here. And I think it's the most important one, because when we talk about life hacks, it's easy to say, well, I mean, there's a clear internal benefit to me if I just take somebody else's stuff. But then that person experiences a loss. And in my mind, we have an ethical responsibility to look at life hacks as something where nobody takes that loss, where nobody's taking a bath on the process. We're not stealing, we're hacking our lives. We're not gaming the system, we're finding an aspect of the system that we can use to our benefit. So now that we have that framework, let's take a look at the cashback credit card. It's what inspired this particular talk. It's a very interesting financial instrument, but what is it? Well, at the very base, it's a revolving credit facility. So compare this to like a mortgage or a car loan, something where you get a set amount of money to buy an asset and pay it back on a schedule. A revolving credit facility involves borrowing money as well, but you have the ability to borrow whatever you want, pay back whatever you want. So that's lines of credit, that's credit cards, that's all those things that we experience in our daily life. You probably have one in your wallet right now. In general, it is funded by, so the money comes from a financial institution. Now, I work for a bank, and a bank is certainly a great example of a financial institution, but not all financial institutions are banks. And it's important to remember that these days, anybody with a lot of capital can be a financial institution. It is administrated by a payment network operator. So these are the people that create the network, give you the rules to play by, and keep track of everything. They do all the tallies, all the bookkeeping. Think Visa or MasterCard or Interac. And finally, the interesting thing about a cashback credit card is what it does, what it offers you, where the life hack comes from, and that's that it offers a return on purchases. So when you go to buy something, you get a fraction of that cost, sometimes as high as 4%, back into your account, generally paid as a check or a deposit once a year. Now, that's especially interesting when you think of what you have to do even to earn a return on your investments these days. I don't know if anyone has purchased a GIC lately, but the rates aren't great. You can't earn 4% on your investment. So how does it make sense that you can earn it on your purchases? Is it a life hack or is somebody getting screwed? So to answer that question, let's take a look at whether it fits our various models. So firstly, like using a particular card instead of cash, for example, is an obvious tip or trick. It's a skill to understand the industry and understand what card you should be using. So it fits our practical definition, absolutely. There are certainly complementary incentives at play. I'm taking advantage of the incentives of the payment network operator or the financial institution or any number of people to generate an internal benefit for myself. So it fits our economic definition. Then we can look at the business model of it, and the cashback card certainly is an innovation that didn't always exist, that businesses use to create a benefit where there wasn't one before. So based on those three criterias, it makes sense. It's a life hack. Too easy, right? Well, whenever you bring up banking or credit, I can always hear the shouts in your minds that somebody must be taking a bath. There must be somebody here who we're not thinking of. But really, we need to find whether there is a loss, and if so, where? So is anybody getting screwed, and if so, how? Let's take a look at who's involved in the game. Now, an astute observer will already know this from my earlier slides, but let's recap. So one of the players in the game is the retailer, the person that sells the things that you're hoping to buy with this cashback credit card. Someone else in the game is the payment network operator, so the person who administrates the cashback credit card, the person who decides how much cashback you get, what your annual fees are, etc. There's the sponsoring financial institution, whether it's Scotiabank or Walmart or Google or anybody with capital. And then there's you, the person who buys the things from the retailer. So let's run through there. So who is a retailer and what do they do? Well, they sell things. They sell things that you need or want, whether it's cupcakes or cars or technological services, they're a retailer. They get a benefit, a very clear benefit, from you having access to easy transacting ability. If we think about retail theory for a minute, we know that there are only really three things that you have to sell somebody something. You have to have something that they want, you have to have a relationship with the person that you want to sell to, and you have to have a means of transacting the exchange. So the easier that gets, the more businesses are free to focus on those first two criteria. So there's a very clear benefit to the retailer there. They can just sell more stuff, more slurm. And the thing that people often quote, they say, yes, but Ben, what about higher prices? Well, don't the stores just jack up their prices in exchange for this, and don't I end up paying more for my stuff when I go to the store? Well, yes and no. Because you got to remember that when pricing models are determined, they're not determined for an individual, they're determined generally for a product. Now, that's obviously a generalization, but in general, the effect of a couple of cents that you pay to accept credit card transactions will not be reflected in any significant way on your bill as a consumer. So certainly, I mean, fees will get a little higher, but they get higher for everyone. And if you're at a retailer that you intend to buy stuff from anyways, you're going to be paying that price anyway. So there's no net loss to you. So great. As far as retailers are concerned, we don't have to worry. Nobody's taking a huge bath. So the next player in the game is the payment network operator. And here we said Visa or Discover Card or American Express or Interac. What do they do? Well, they offer the credit card. And we said earlier that they keep all the bookkeeping. They are the ones that are operating that means of exchange. And they do get money for doing so. The retailer will pay them to say, well, now I want to accept Visa, or now I want to accept Discover, or now I want to accept Interac instead of cash. And that is a clear benefit for the retailer, certainly, but is also a clear benefit for the payment network operator. I mean, their whole business model is based around charging people to access their network. But what about the annual fees on the card? Of course, they're offering me cash back, you say, but they must be recouping that in the fees that they charge me just to have a Visa. But the thing is, there's a cap on the fee. For example, one of Scotiabank's cashback cards charges about $49 a year. Contrast that with the fact that there is no cap on the cashback that you can earn. So it's not very hard to exceed that annual fee, and it's not very hard to start generating a net benefit for yourself. As an aside, annual fees often aren't charged to make profit. They're not charged to earn more money. They're charged to offset the cost of offering the product, to deal with your fixed costs. So often annual fees, they might seem high when we sign up for them, but in this case, the retailer gets to charge them to drive down their costs, and they don't affect our ability to get a return. So again, there's no net loss there for either retailer or the payment network operator. The next player in the game here is the financial institution. So again, we said this could be a bank, this could be Walmart, this could be anyone with capital that wants to lend you the money. Now, when you go and make a purchase on your credit card, what you're doing is you're borrowing some money from that financial institution to pay for whatever it is on the assumption that you're going to pay them back. So they provide the capital to actually make the purchases. They earn a fee often from the payment network operator, and they get to offer new relationships. They get to say, listen, I know you bank with us, I know you do your investments with us, but how about having a credit card as well? So there are two streams of benefit for the financial institution. But the caveat here is a big one, and I think all of you probably have it on the back of your minds, the idea of interest. Well, what if I have a credit card and I'm earning this cash back, but now I'm paying a lot in interest? Certainly they're out to make me take a net loss. That's where the net loss comes from. Well, funny story about that. A lot of times these days, financial institutions will offer credit cards that have either a very low interest rate or have an interest rate-free grace period. So when we look at credit cards, obviously the interest rates are always high for lending. They're always around 20% for most cards, and they can get higher for store cards, for example. But many cashback cards offer that interest-free grace period. So you can make a purchase on your credit card, you can pay it back with cash, you can earn the reward, and the bank will never recoup a cent of interest from you on that purchase, or the financial institution, excuse me. So that's an interesting way of thinking about it. If we act in a certain way, if we use a tip, trick, skill, or shortcut to manage our money in a certain way, we don't pay interest. There's no net loss to us, and there's no net loss to the bank. They offer that, they get their fee for offering it, they get new relationships and deeper relationships, and they're not as concerned about taking our money by interest. Finally, of course, there's you, and this is the person that we need to worry about the most. When you're at the market doing your purchases, generally we don't always think about every aspect of the purchases we're making, and that leads to a sense of mistrust. We tend to mistrust financial institutions and say, well, I must be taking the loss. If the retailer isn't taking it, if the payment network operator isn't taking it, if the financial institution isn't taking it, it must be me. But all you're doing here is you're buying things that you like or things that you need. I mean, we can all argue about our spending habits, but there are some things that we simply need to buy. We don't have access to them ourselves. And we get that clear benefit from that deposit or check into our account every year. Scotiabank does it in November for all the cash back that we've earned. And the question, the loss that people envision here is based on spending habits. So it is not necessarily always a net positive if we have bad spending habits. I do a little bit of personal finance work and our spending habits are something that we need to think about separately from this business model. If we think about this as a situation where everybody is going to act optimally, where we know how to hack, we know this life hack, we can employ it correctly, well, then that doesn't really come into play. There are plenty of ways for us not to take a loss on it. So based on that, it fits. Now, I have some closing thoughts about this topic, and it's been very sort of data-oriented so far. I've been showing you a couple different things and how they work, but the interesting thing for me about this life hack and about life hacks in general is whether we can think win-win through them or not. Whether there is a situation where we can leverage all these incentives, where we can leverage our business model, and when we can figure out whether it actually is win-win or not. Sorry, I misspoke there. So there's that cycle, and we took a look at it, and sort of the four big building pieces, nobody really takes a loss. Now, the reason I was talking about spending habits is that it's easy to see examples of credit systems or credit card systems where people have been burned. Whenever we talk about lending, whenever I bring up lending in a conversation, everybody has something to say about predatory lending practices or a friend who declared bankruptcy, and that's true, and that's valid, and that's a real concern. But it's not hard to find in any industry, with any product, with any system, people who use it unethically, people who are out to make a buck by making somebody else take a loss. And the interesting thing with the cashback card isn't that it's often misused. It's that if it is used correctly, then it really is a win-win situation. The interesting thing, and these are my concluding thoughts, so if I was horrible, I'm almost done. But the interesting thing isn't that it's possible to lose. It's always going to be possible to lose. The interesting thing about the cashback credit card is that it's possible to win. So I'll leave you with that thought. I will say another thank you to everybody present.